Hi folks, I'm Will Bridges from 123 Trade, and in this video we are going to cover lots of Forex news. There is a lot that happens around the world, a lot of things that people don't really understand what they mean or how they impact markets, but I want to give people a little bit more of an idea of what you can do with this information to figure out what currency pairs to pick to trade. Like how do I know what to trade? What's going to move this week? Okay, so that's what we're going to figure out in videos like this one and many more to come. So if you enjoy this type of content, then push the thumbs up. I believe in you. Subscribe, ring the bell. We're going to have lots more content on the way. Always looking for new things to share and teach with our clients, and by all means, if you want to trade live with us, then you can do that as well. All you have to do is fund a trading account with us, and you can do that for free. Here is a risk disclaimer. What this says is if you put your money into the market or the Forex or any other market, then your capital is at risk. You do have to risk it to get the biscuit. No such thing as a guaranteed trade. Everything in this video will be for educational purpose only. And now let's get to the actual news. And I'm on forexfactory.com right now. And I like to use the Forex Factory economic calendar because of a lot of the functionality that's here. For example, I can filter by country. I can filter by the impact. So if I only want to see the high and medium impact stuff, then I can filter out all the other supposed noise that doesn't typically have a big impact on the market. Or you can read all of it. I'd say this is more of an advanced button if you want to have that checked. Otherwise, the yellow ones are going to be pretty useless for most traders. So once I've figured out what I want to actually look at, I want to look at everything for this entire world, every major economy. Okay, and I want to just work my way down. I'm going to look at the forecast information that's here in the middle. Okay, that's what this middle column is here. This is what they're expecting the numbers to be. This is the rumor. So a lot of people like to trade the rumor. So the rumor is that the bond market is weak. Okay, because if I look at this here, this is what the bond market highest yield that they were able to sell. This is a declining number, and they are having to get it with more bids per close. So they're having to get more people to look at these bond rates to get fewer sales at a lower rate, and this has been declining. Okay, so that's not a good number for the US dollar strength. This inflationary number right here, this 0.5%. Okay, just to dig into this CPI number, this is Consumer Price Index. Okay, this is really a measure of how much the value of money is going down, more so than anything else. But if you see these numbers, they're higher than anticipated, which is what green indicates. Green doesn't always mean good. It just means higher than we expected. Okay, it depends on what you're trading. If you're looking at something like metals, commodities, all that type of stuff, commodities are likely to be hot as long as these numbers are really hot. Because if we go to the graph here and we look at the CPI over time, these are some of the highest CPI numbers that we've seen in many years, and I think last month was one of the highest numbers we've seen in better part of a decade. I think the last time we saw a number as high as 0.7 would have been all the way back here in 2008, 2009. So if these numbers do continue to get worse, that is not a good signal for what's going on with the world economy. Same thing could be said for the other inflationary numbers that are below here. If I exit this one out here, let's close out this graph. Our core CPI numbers, those are going to be very similar, also very impactful. Those are going to be happening Tuesday morning, so tomorrow morning. This stuff is going to be coming out, and there's likely to be some trend set in the market once all this news comes out. Usually, let's just say all these sales numbers, all this stuff, a lot of this stuff is already going to be factored in. Let's talk about this more as we continue. But so far, we're talking about some potentially very high inflation in the U.S., which could force some interest rate changes. So if they come out and say that they're going to raise interest rates sooner, that would be typically bullish for the dollar. If they let it ride, then let's just say it's not. So the RBNZ rate statement, okay, this is going to be big news when this comes out. And really, this is just the Royal Bank of New Zealand. That's what the RBNZ is. Okay, so they are typically, one of the more hawkish governments in the world. And hawkish essentially means that they are looking to raise interest rates as opposed to lowering them, which would be dovish. More of what Europe is doing right now. The U.S. is really taking more of a wait-and-see approach, but we are still, nonetheless, not looking to lower, so we are still, slightly leaning towards the hawkish side of things, especially with the inflation numbers that have been coming out. So this will be big news. There'll be lots of news here for you to read here in what's going on with New Zealand. Generally, they've got a very strong economy. New Zealand did very well with COVID. They quarantined extremely well. They were used as a model to show everyone else in the world how stupid the United States government is. And maybe that was right, maybe it wasn't. But bottom line is that, they're very much in a good position to continue performing as one of the top economies in the world, just based on the fact that they have sound money principles in New Zealand. The official cash rate there, not likely to change, but this is their interest rate there. That is likely to come up, I think, sooner than in other countries. If you want to read more about that, then I'm sure there's a lot of it here, or you could just type in New Zealand interest rate. I think they are the only ones that are planning to change interest rates about the same time that the U.S. is going to do it. Okay, so they are about equally as hawkish as the U.S. government, which is very important to know. That means that, large banks, institutions might be taking, bullish opportunities on things like the NZD. The GBP, this is another interesting one here. Okay, this is their CPI numbers year over year looking over 2%. So they're looking at a situation where they may be able to raise interest rates soon as well. Which is a big driver for the value of everything, especially if you're talking about the money itself. Okay, stock markets typically aren't going to like it when interest rates get raised. Okay, they're not going to like it when taxes go up. But either way, that money is not going to disappear when people close out their stock positions. It's going to go to dollars. It's going to go to pounds. It's going to go to euros. Whatever it is. So if they're looking at high inflation numbers here, you may want to look for bullish activity on the GBP. USD, this is more inflation rate here. Okay, PPI, core PPI. These are both high numbers as well. If we come down here and we look at the graph of these all time, all of these are higher than expected, which is not comforting when you talk about inflation. Okay, we've got some deflationary periods here as well. This is last year at the height of the lockdowns. That's what this big dip is. Okay, so that's not good. What we're getting is a little bit of a slingshot towards the other side. That's why the central banks are telling us that this is only transitory. They could be right. We do have declining numbers of PPI here, if you do look at this here. So this could be something that just works itself out as we work our way through the year. But that being said, these inflationary numbers are still going to be big. People are going to try to, let's just say the U.S. doesn't want to raise inflation rates. They don't want to raise interest rates. They just want inflation to kind of rein itself in if they don't do anything. And, it's looking like that may happen if you look at the PPI. But otherwise, let's keep on working our way down our list here. So we're now at the BOC Monetary Policy Report. This is the Bank of Canada. Okay, so their rate statement's likely to come out. Really, with Canada, the big thing to understand is that they very much hinge on what the Federal Reserve is doing here in the United States. So if, we're talking about raising rates, they're probably not going to do anything until after they see what happens when we try to do it. So this is very much going to be in my opinion, a blah thing, unless they come out and tell people something that nobody knew about, which is possible. However, I think unlikely. There is going to be more news on Forex Factory's page. If you click on the folder button that's next to the announcement itself, then you can come down here and you can see what's going on and read more about that. But generally speaking, I'm going to try to give as much of an overview as I can here. Overnight rate, this is also not likely to change. Canada is not looking to raise their interest rate anytime in the next year or longer. So that being said, let's keep on moving. Crude oil inventories, this one has a big impact on, the value of the Canadian dollar for one. The JPY will be heavily affected as well. But what we're looking at is a declining inventory of oil in the United States by a greater amount than expected. This is because demand has gone up, price has gone up. They've also driven down supply, shutting down the Keystone XL pipeline. There have been the ransomware attack earlier this year. There's just been every opposition to oil that you could think of in the United States since January. So I do anticipate this number to come out, green again, which basically means oil might see another lift. We might see it kick into the driveway at that $80 price target that Goldman Sachs put out for us a few months ago. Bank of Canada press conference, this is just where they're going to come out and tell everybody what they probably aren't going to do. They're going to probably try to hide whatever it is they actually want to do, and we're going to do that later. We're not going to do it sooner, and then they'll change that statement later, and they'll play the game. Fed Chair Powell testifies. That'll be the same thing. The government will come and say, hey, is inflation bad? And he's going to say no, even if he thinks that it's bad. So that stuff is going to be very kind of a moot point unless they change a strategy somewhere. They are talking about raising the debt ceiling in the United States, so that may come to fruition on Wednesday here at noon when Powell testifies. Okay, so that we find out that that actually has to happen, because Janet Yellen has been calling for it. If we don't raise the debt ceiling, there will be no way to pay off interest for the U.S. government, so they are in big trouble if that happens. Employment change in Australia. Okay, this looks like it's set to be positive, relatively flat. Okay, same thing could be said about their unemployment rate, static, 5.1%. That is a good number. Okay, so something tells me that this number is likely. I mean, they don't seem to be doing a whole lot by way of lockdowns anymore in Australia. That might have been affected for a few days in Sydney, I want to say last month. So that's a good reason why this is probably lower as far as the jobs gained than this 115,000 that occurred the month before. But either way, Australia is still looking strong. A lot of the reason for that is they sell a ton of iron ore to China, and this is their GDP quarter over year number here. And I don't know if you can see this, okay, but this is 8% GDP growth. Okay, that is huge. Okay, so their previous quarter, 18.3%, they are growing fast. Okay, I don't know if anybody realizes it, but in the words of Donald Trump, China is growing a lot like a weed. Okay, so commodity-based economies like Australia, New Zealand, very likely to benefit from situations like that. So if this number continues to come out crazy strong, like 8%, okay, then, well, let's just say we're going to probably see more commodity-based strength in New Zealand and also in Australia. Same thing could be said for gold and silver, milk, whatever it is that you want to look at that's tied to the value of the dollar or currency in general. Commodities, with all the inflation that we're looking at, are likely to go up. Okay, so there is no gospel in the world, and obviously there's a lot of dark forces in the markets, whoever those people are, that are, well, trying to drive down the value of silver so that they can support our global shift to electric vehicles. But MPC member Saunders speaks. Okay, so this is going to be relatively medium impact. There may be a slight bump here on Thursday at 6 a.m. when this speech happens. Very likely the market returns to wherever it was after that happens. The Philly Fed Manufacturing Index. Okay, so manufacturing has been relatively, well, let's go ahead and look. I'll show you guys the chart here. It's been kind of spastic here. We've had some big booms here recently. We've been relatively stable the last several years, and really this doesn't really, it really looks much better since the lockdown period that we had last year. So those numbers continue to look solid. If they go up, that's obviously bullish. Anything higher than last month is better from a relative standpoint. But unemployment claims, these are still looking pretty high, 350,000. Okay, so these numbers are big. If we go down to more and we look at this forever, actually, let's just go to the graph. Okay, if you guys can see these unemployment claims that happened, okay, so this is kind of winding down from the COVID madness here. So people are finally getting back to work. It's just taking a really long time. Okay, so really what we need to do is get back down to this level here. Normal was 100 and something thousand. Okay, so 200,000. So much lower. 50% less. 30% less than where we are right now is normal. So we're on the right track, just not quite to where we need to be as far as the unemployment claims goes. But that is something to keep an eye on to make sure that it doesn't end up going the other direction for some reason. Industrial production, this is big. Generally not going to be the biggest mover of the week, but it is something that, manufacturing, industry, something that you want to pay a lot of attention to as a trader, because it's going to have more influence than a lot of other sectors that have lower dollar prices on them. Okay, so Fed Chair Powell is going to testify twice, I guess. So he should have a two-parter. Should be lots of fun to watch. CPI in New Zealand. This is inflation in New Zealand. This also looks high. Okay, it's 0.7%. So if we come to their graph here, I've been talking about how bullish I've been on New Zealand for a lot of this conversation here. Their actually CPIs look fairly healthy. So throughout most of this time period that's before here, they were looking to raise rates, okay, for the last few years. Okay, so if I know that, and I know that this, anomaly down here in July of 2020 from when they locked down their economy and didn't let anybody go to work and they paid them for the opportunity, okay, then I'm going to overlook that, okay, and I'm going to look at the fact that these people are still hawkish. Everything in this week is telling me that, New Zealand is a good place to look for a bullish opportunity. So that means that the Aussie New Zealand may come down just a shade. You may see some pretty good action in a lot of different places. Japan is going to come out with a very cryptic announcement at a tentative time on Thursday, which basically means they're going to come out and tell us that they're happy about having an inexpensive yen for however long they've been wanting to do that. They're going to tell everybody, a blanketed format of exactly what it is that they're going to be doing. And then USD is going to come out with core retail sales. These numbers look soft, and they have looked soft. People aren't spending, and that's a problem. Okay, so retail sales. This is going to be very much similar to retail or to core retail sales. But end of the day, these numbers are very sporadic, very spotty. So these are weakening for the dollar. So we're getting a very, influx message for the U.S. dollar. We're looking at relative strength on the New Zealand dollar. GBP, we're looking for strength. CAD, we're looking for a little bit of weakness. But that is going to be mixed up with a little bit of strength in the commodity sector because, well, let's just say they do a lot of oil business up in Canada. But that being said, that's very much what's going on in the world for this week. And if you guys liked the video, then by all means, hook us up with a thumbs up. Support us in the easiest way possible that requires little to no actual work. Subscribe, ring the bell. Otherwise, there's lots of other videos on our channel, on our website. There's more information in the description below this video. There's another video that you could watch right after here. But you are going to want to subscribe and ring that bell, click the bell so that you can get notifications directly from the good people at YouTube. But again, I'm Will Bridges from 123 Trade. Thanks for checking out the video. You be good or be good at it. Take care, folks.